After a hard financial year for Ugandan taxpayer that was characterized by salary delays and uproar about high taxes that led to some companies closing down, the Ugandan taxpayer is again headed towards another 12 financial months of the same cycle. The Uganda Revenue Authority targets to reach all taxpayers, including those that may have dodged during the last financial year, for it to raise a total of 8.5 trillion Uganda shillings, over 1.2 trillion more than last financial year projections.
The net target is 8534.51. The net target for last year was 7284. So there's an increment of about 1.3 trillion.
Among these strategies, the tax collector targets to reach the informal sector by registration through the help of local authorities, going for private sector register, conduct frequent audits in companies, strengthening compliance of pay-as-you-earn remittances, labeling goods for exports to avoid dodging, strengthening rental project, using information from registered taxpayers to identify their suppliers for registration, and publicize non-compliant taxpayers. The worst will reach a non-compliant taxpayer when he or she will be dragged to court and forced to pay full amount he has been dodging that will come with a penalty fee.
So we'll do extensive consultation all the business stakeholders and other government agencies to make sure that the direction we are taking are agreed upon and they appreciate so that we all own up and move together.
For the financial year that ended 2012-2013, Uganda Revenue Authority managed to collect a total of 7.1 trillion Uganda shillings against a target of 7.2 trillion shillings. This means it registered a deficit of 135 billion shillings. The tax body failed to raise the target for international trade, registering a deficit of 322 billion. It, however, performed well in domestic collections by collecting a total of 202.27 billion shillings in what many view as going for the obvious, failing to broaden the international collections.
The fuel import volumes for all products, that is diesel, petrol, jet fuel and kerosene, for that year grew by 0.56%. 0.56% against a target of 6.6%.
For this financial year, major targets for Uganda Revenue Authority is wholesale and retail shops, construction sector and real estate, with hope that collection from value-added tax, withholding tax on bank interest and import duty will perform well, as it was the case during the 2012-2013 financial year. Kenneth Bwire, WBS Business.